It is Friday, November 30th. December is almost upon us. We're going to talk about just a quick overview of the portfolio and then where I think the overall markets are going in the coming month and next year. So, first of all, it's actually down. It says up, I'm actually down like $100 from yesterday, a little bit less than 100, about $60. Biggest disappointments, EXK went down 3%. It's now at 185. I bought last time at 181, but I think I'm gonna let it drop down further for this following trade. I did make a good trade on EXK once again, which makes it like number 36 good trades that I made on EXK, even though I'm down on my mistakenly long-term investment on the company in one of my other accounts. Um, let's see what else happened. Everything was fairly flat throughout the day. Uranium was down a little bit, except Energy Fuels was up 4.4%, URG up 6.5, but the overall uranium market's about flat actually. And Cameco's down 0.5 or so. Apple's down 0.5. China moved up a little bit, and it moved up on strong dollar, which is kind of weird. And the overall market up 0.5. So nothing overly exciting. I did collect a lot of dividends. So we'll go over here in the dividend tab. I collected here some dividends, the big ones being from Oxford Lane. Um, we got this is from YYY. This one is, I think, I forget. This one's FAX, and this one is EDF, I believe. It doesn't give me the symbols over here, but I'm just going by name. So a decent dividend day. I think December is going to be a big dividend month for me for New Year's. I have a lot of things that are due to pay dividends at the turn of the year, so I should probably get two, three, at least $100 worth of dividends there. Um, all right, so where do I think the markets are going to the end of the year? Not that I have been that right. I haven't beat the market this year, but I am positive, so that's good. Year over year, at least here. Um, about 3%. I think market's up about 6% year over year. So, what do I think the market is going to do? I'm thinking that we're probably in for another one more, yet another leg up in the markets. And some of the reasons are one, yields have started to back away now. Two, the Fed Chairman Powell has subtly eased his stance on rate increases. Three, there's still a lot of worrying out there. So I listen to a lot of shows, financial investment stuff, podcasts, and this and that, and people are still kind of worried, man. They're worried about a big drop. You look at the S&P and the Dow, and everything looks pretty exponential up, and people are worried it's going to go down, and for that reason, there's a lot of defensive plays that are being unfolded. This is the S&P 500 SPY. This is the ETF that tracks the S&P 500. So people have a lot of defense that they've employed here, and they're worried about all this being erased, which is a good thing to worry about. However, if everybody seems to be on one side of the trade, then I mean, you wanna go on the other way because that trade is exhausted. So I'm just not seeing like the mania. At the end of such big like bull markets, there needs to be a blow off top, and I don't think we can count this as a blow off top here. Because number one, it wasn't the high. The high was over here, right? It wasn't in January, it was September. So from a technical perspective, this could have been a blow off top, but it just wasn't. And so I don't hear like people are not talking about the stock market. They're not throwing everything in their kitchen sink into the stock market like they were in Bitcoin. So I don't see it, man. 2007 there was a mania. The housing. Everybody's talking about houses and buying like 700 houses and leveraging them up and all these loans and being all stretched thin. But this time around, like, yes, corporate debt is a little bit out of control. Like, yeah, housing markets prices are high. Yeah, stock market's high, but there's still like earnings are coming in. They're keep improving. Um, there's plenty of capital to wash around. Um, Even enough to where the stock market is kind of up, at these heights, and yet we still have money collectively in the world to throw money at US bonds as well. So, I mean, it's kind of a crazy amount of money. It just makes me feel like there's so much more money on the sidelines just waiting to get in. So, I haven't seen, in my opinion, anyway, I haven't seen a blow off top for the overall US stock market just yet. So, I'm thinking that it's gonna go like all the way up. I mean, I'm talking like 350 here, 3,500 for the S&P before it finally decides to crash. But we'll see how much money we draw in. Anyways, I don't think that's the bottom. I might be wrong, of course. There's been such a huge bull run here, and this could be a mini bear market, a correction of nearly 20%, maybe a little bit over in the call it a bear market. But I think there's a much bigger move setting up in the future that's going to get stopped out by the central banks, and we're not really going to have a crash a la 2008. It's going to be averted, it's going to be prevented, and it's going to go into drastic measures like creating an excessive amount of currency and buying up depressed assets to lift asset values, because that's what's been working in the past. That's what they know, and that's their playbook. So that's my outlook for the market. Um, you know, don't listen to me. Make your own investment decisions. Consult your own financial advisors. Blah blah blah. All right, that's it. I'll see you all next week. I'm thinking of selling some puts on Apple, man. We'll see. See what happens next week. If it drops low enough, I might do it. All right, that's it for now. Peace out.